Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. I founded it back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and of course, my favorite, advanced mechanical trading algorithms like you see here with our 21 mean reversion systems, which, by the way, knocked it out of the park today, guys. We went long on Friday. A bunch of our systems triggered. Hell of a day today. Of course, also our famous KISS trend following systems, which have been knocking it out of the park as well. Anyway, let's go and get started. This is a market newsletter video update for January 8th, 2024. As you can see via the table of contents, it's divided into 6 major sections. Again, great day for the market. The S&P was up 66 points, about 1.4%. The Nasdaq was up 2.1%, so a big day. The Dow lagged today primarily because of Boeing. Anyway, also this morning, pre-market, I added a handful of actionable trade ideas, and if you paid attention, they did well. Microsoft, Nvidia especially, but all these others. So overall, great day. And again, as far as the market, guys, like I said, coming into Friday of last week, the market was quite oversold, as evident by the NIMO, McClellan Oscillator, trading below its lower Bollinger Bands for 3 consecutive days, and especially the NAMO, that's the McClellan Oscillator for the Nasdaq, was trading below its lower Bollinger Bands for 4 consecutive days. When I did some history on that a while back, I think 4 to 5 was the most I seen. I think it was 5 one time, but 4 is about the max you get. So, and I'm going to show these charts below, but just as an example, here's the NAMO. It was below its lower Bollinger Bands for 4 consecutive days. That's usually a great mean reversion, and we got that today, snapback. The other thing that occurred was on Friday, we had a VIX Bollinger Band buy signal. Okay, that's when the VIX closes back inside it's trading outside its upper Bollinger Bands, like you see here. It was doing that last Thursday, and it closed back in on Friday. That's a buy signal for the S&P. And that obviously played out in a big way today. Again, congrats to those of you who took our mean reversion systems trades on Friday. I sent out a trade notification on Thursday evening, and then on Friday morning, about an hour before the market opened, I sent out the official trade alert. I know quite a few of you took it, our subscribers. If you're not a subscriber and you're simply on YouTube, obviously you didn't see the alert. That's why you need to be a subscriber. And anyway, fantastic day. You could have paid for your membership for years over. Okay. Here's the key events for the week. CPI is the big one on Thursday, especially. Plenty of stuff here, though. And again, administration note, which Steve commented. This is the first, guys. Both Steve and I will be traveling Monday, the January 15th through the 17th. So there's not going to be any newsletters there. We're not going to be here during the day. That's a first, because every time in the past, when one of us would go out of town, one of us would stay here and cover everything. So again, you guys would be okay for 2 days, and we may even see a few of you in New York. Anyway, let's go ahead and move on. All right, apologize, I had to pause for a second. So the first image here, let's talk about the mean reversion systems. So this image shows you the mean reversion systems that went long on ES futures and the SPY ETF last week. So you can see almost all these closed out today. Again, they weren't long-term trades, were they? No. They were fast and quick, but very nice trades nonetheless. And again, easily enough to pay for a subscription here just doing these trades. Now we still have one open trade here, the S-trap. You can see that did not close out today. It looks like it's going to close out tomorrow on the open. And if that does, I'll send out a trade notification. But again, congrats to anyone who took these trades. I sent these out on Friday officially for the website to enter them. Next. Image number 3. Let's just look at the tally on the trades. So here's the SPY systems for 2023 and 2024. Again, for 2023, there wasn't a lot of mean reversion systems, especially the later part of the year when the market just kept rallying. Remember, the mean reversion systems, you need a pullback in the market. In the last 2 months, we didn't have any pullback. But again, you can see the S-trap trade closed out today for about a $358 gain based on an investment of $20. Next, image number 4. Here's the ES system trade. So on the ES side, we had more systems go long. 3 subsystems went long. The S trap is still open. I closed out half the position today. So on the ES side, we always do at least 2 contracts so that we can scale one off. So I closed the one out, but look at these gains. 800 bucks for the trend pullback and the QE Momo. And we locked in $400 for selling half of the S trap. So again, nice gains there. $2,000. Not a bad day, and we still have one open position. So again, congrats to anyone who took those. And if you're not a subscriber, sign up so you can start receiving trade notifications to these. Next, image number 5. This shows you the index sector table, what transpired today. Again, big gain in the market, as you can see. The Dow lagged, again, because of Boeing, but still was up 1.4% for the S&P, about 2.1 to 2.2% for the Nasdaq. Out of the 21 market sectors we follow, only 2 were down, and that was energy. Okay, broad-based rally. Currencies, US dollar down about 0.2%. Cryptocurrencies rallied again nicely today, as did some of the stocks, except for MSTR. Commodities were mostly down here, again, primarily because of crude oil, which lost over 4% today. So that had a big effect on DBC, which is the index, down almost 1.5%. Gasoline down 3.6%. Natural gas up 3%. Weakness in the ag area. And precious metals continue to be weak here. Though they weren't down too much, and GDX, the miners, were only down 0.25%. And if we look at the bond market, the 10-year was down nicely today. Next, item number 6 shows the economic news calendar, which I already covered. Like I said, CPI is the big one on Wednesday. We also have PPI in the week. And let's go and jump to these index charts. So the first chart below, item number 7, is the daily snapshot of the 5 key major indexes with their Bollinger Bands. So the Dow, remember, it lost its middle Bollinger Band, or its 9 EMA last week. What did it? I say, where would it find support? I said right at the 20-day moving average, middle Bollinger Band. That's where it bounced off of. Again, nice day, nice bounces on these indexes, as you can see. Next, chart number 8. Here's the Dow. Again, as you know, the Dow has been basically a straight-up moonshot since that October lows. We had a slight RSI divergence late last week, which played out for a quick pullback, and you can see today it bounced right off that 20-day moving average. Again, a very simple guide, guys. Whenever you're trending above the 9 EMA for a long period of time and you break it on a closing basis, you almost always tag and bounce off that 20-day, which we did. Next, image number 9. Here's the S-Dow. That's the Ultra Inverse ETF for the Dow. Again, this triggered as a last week long is a pullback in the market, and we got a little trade out of it, but I said to take profits at that 20-day moving average. Hopefully you did, as that's where it opened and then sold off strongly from. Next, chart number 10. Here's the S&P. Now this is a weekly chart. Again, starting off the week pretty good, up 1.4%. Again, should we go back to highs, new highs, then I would expect us to at least test the all-time highs. If we form a lower high, then I think we'll come down to this area, which was previous resistance and now big support, right around the 4,600 area. Next, chart number 11. Here's a daily view of the S&P. Again, big old up candle today, bullish engulfing. Solid candle with almost no wicks, so very strong day. Just a stone throw away from the highs. We could still potentially form a lower high here. Could be a wave B, but we'll see tomorrow. Next, chart number 12. Here's another daily view, just showing a zoomed out view of the daily. There's a big support area around here. Next, chart number 13. Here's the KISS system. This is the KISS system on the S&P with that wider stop. And remember, I said if you want to stay in the market, you could utilize this one. And this was never hit, and it's still long. You can see how price came down to the ATR here and bounced off of it. Again, it still has yet to take out the highs. It's still possible we could put in a little lower high here and then come down again, but we'll see. Next, chart 14. Here's the 4 time frames. So the daily up here, remember we had all those A's at the top, and that did lead for a pullback. That was at the end of the year. That represents light volume, and pulled back to the ATR, bounced. We had a DeMarca 9 on a half day and a support cycle. We bounced right off of that. And on 130 minute, we had a DeMarca 9. Next, chart 15. Here's the half day chart. Again, early last week, we were showing that little rising wedge, which again did play out for a trade, guys. A quick move to the downside, bouncing off this 50 MA, rallying up nicely today. Moving average was pinching. It's still in a bullish configuration. Chart 16, here's the 60-minute chart I've been showing. Now, we did have a symmetry break as of the lows last week, roughly 100 points off the highs. So that does still give some higher odds that we could still form a lower high, even though we had a hell of a day today. So it is something to keep in mind. Okay. Next. Chart 17, here's a 30-minute view of the S&P. Steve showed this on the weekend. Nice clean channel. Basically, right in the morning, guys, if you were not long coming into today, right here on this channel break, you could have taken a long. Again, this chart was in the weekend newsletter. Again, our analysis have been very good here. We showed this rising wedge back in late December, which played out, and we showed this on the weekend. So you could have went long right this morning. We've rallied up. Now we're in a supply zone. So it's still possible we could form a lower high in here. Now, if we get above this area, above this 47.77 area on a good closing basis, then I think we just go to new highs. But it's still possible we could kind of reverse in this area, perhaps. Next. Chart 18, here's another 30-minute chart. Remember last week I was showing the support zone. Well, obviously we bounced off of it after breaking that channel. Next, chart 19, here's a 15-minute chart of the S&P. And I know this is simplistic. This indicator, it's called the zigzag indicator. And it automatically does this. But you can see just a series of lower highs we had in place, all lower highs. And once you took out that last lower high, we call that a bullish break in structure. That was your confirmation to go long right in here. And of course, then a straight up moonshot today. Finally, chart 20. Here's a 15-minute view. Again, shows you the channel from the weekend. We rallied out of the channel strongly. We filled this area, and there was an open gap, which we filled there as well. So quite strong. Finally, chart 21. Here's another 15-minute chart. Now, this has the price by volume. And notice here, we got a pretty big volume bar up here. And that roughly matches this supply zone up in here. Okay, so that's an area to monitor as still potentially resistance area going forward. Next, chart 22. Here's the triple Qs. Nice rally off that doji from last week. Again, closed back above its 9 and 20 MAs. Now, even though the Qs were up the most today, they're still the furthest off the highs. And so it's still possible we could form a lower high on the Qs. Chart 23, here's that weekly chart of the Qs. Again, just showing this potential wave 3 of 5 eventually. Chart 24, here's the KISS trend system. And as you can see, it's still long. Smart trailing stops at 394.60. Nice update today. Notice we're below the ATR, so that is a resistance. Next, chart 25. Here's the 4 time frames. Again, just like on the S&P daily, you had the A's at the highs in December. We're below the ATR, that's your resistance. We had a DeMarca 9 on a half day. We bounced off of it. running into an ATR here. We had a DeMark 13 on the 130 minute and rallied from there. So logical, again, everything was set up for a rally coming in today and we got it. Next, chart 26. Here's the 2-hour or the half day chart. Again, that pullback from late December was almost 18 points. That was the largest pullback, a symmetry break. Because of that, I'm still open for a lower high ultimately here. Next, chart 27. Here's a 2-hour view. Remember, we were showing this rising wedge last week, which played out. There's an open gap here that we haven't filled yet. Notice the moving average ribbon did turn to a bearish stacking, and it's pinching on the underside. Next, chart 28. Here's a 30-minute chart. Again, clean break of the channel. We got that right in the morning. Basically a breakaway gap. You could have jumped on that gap. And a nice move up. Here's some fibs. Notice the 61.8 fib roughly matches the open part of that gap. Now, otherwise the gap extends up to here around 409. Finally, chart 29, here's a 15-minute chart just showing you the same thing and highlights that gap above. Next, chart 30, here's IWM. Small caps, again, big rally back today, basically back to the underside of its 9 and 20-day moving averages. Next, chart 31, here's a 60-minute chart. Again, we rallied up a bit, but still below this resistance trend line that Steve drew on the weekend. That's an area to watch, as well as that open gap area. Again, bulls need to get above that gap, quite honestly. So again, guys, on the market, very nice day. But it's still possible we could form some lower highs here. I'd say especially on the Qs and IWM. It's possible we could see a new high in the S&P, but a lower high in the Qs. Next, let's take a look at some of our market indicators. Here's the VIX. As I already discussed, the VIX went on a close below its upper Bollinger Bands on Friday. That's a VIX Bollinger Band buy signal, and that played out beautifully today. Next, chart 33, here's the percentage of stocks in the S&P 500 that are above their 20-day moving average. Remember, last week we had this big divergence between that indicator and price, and that led to a pullback. Obviously, now we're bouncing back. Next, chart 34, here's the NIMO. As I stated, this was below its lower Bollinger Bands for 2-3 days. I think it's actually 3 days. That's very extreme. 3 or 4 days is usually as much as you get. And so we got that mean reversion move back today. I mean, guys, if you want a very simple mean reversion system, whenever this closes below the lower Bollinger Bands, you could take mean reversion trades. Okay. Next, chart 35, here's the NAMO, which was actually below its lower Bollinger Bands for 4 consecutive days, so even more. So it was really stretched and we got that snapback. Chart 36, here's the combo with NAMO and NIMO. They're still below the 0 level. Remember, they went below 0 early last week. They're getting close to 0, but they're still below it technically. Next, moving on to bonds, chart 37, high yield corporate. Again, rally today. Remember, the market follows high yield corporate, but it is lagging relative to the S&P. Now, the 9 is starting to pinch with the 20, but let's take a look at both of them together. Chart 38, here's the a comparison chart of the S&P to high yield corporate. And again, the two move together, as you can see, except sometimes divergences show up, like in July. You had a negative divergence there that led to the top. Then you had a positive divergence there in the October low. So as my comments state here, should the S&P make a new high here, likely you're going to have a lower high on the high yield corporate, and that would be a divergence. Next, moving to bonds and interest rates. So here's a 10-year treasury yield pulling back today a bit. Now we'll see if it forms a higher low or not. Technically, this was the largest rally in this downtrend. So there are some odds at a higher low to be formed. Chart 40, here's TBT, 20-year inverse bond ETF. That was the trade we put out on a bounce on rates. And it did give you a nice trade off that trigger. Chart 41, here's TLT, 20-year bonds itself, rallying, bouncing a bit, back a bit today. Next, as far as the market sectors, guys, Steve just showed all the market sectors on the weekend. I'm not going to go through them, just a couple. Here's XOK Technology. Big bounce back today. But again, it looks very similar to the Qs. You have the 20-day moving average above. Next, Jabber 43 Biotech broke out to another high. This has been a screamer lately. Jabber 44 XRT Retail bouncing back, but right into the 9 and 20 MAs. And finally, Jabber 45 XLE Energy. This was the weak sector today. Kind of had a bear flag look to it. Broke down today with a gap up. Again, crude oil was down over 4%. I will say the stocks held up pretty well considering how weak crude oil was. Let's move to commodities. Jabber 46 DBC, the index, again down 1.5% roughly, largely due to that move in crude oil. Jabber 47, here's crude oil daily, again down over 4%. Here it's in a coil pattern. It's possible this could be some sort of fourth wave coil that leads to yet another move to the downside. We'll see. Next, Jabber 48, natural gas. Remember, broke out of this coil last week, continues up nicely. Jabber 49, copper. Breaking down a bit from that little wedge, as you can see. Now it's into the support of the 20 and 250-day moving averages there. Jabber 50 DBA agriculture. Remember, this broke that coil to the downside last week, and now it's below its 200-day moving average. Pretty big volume pickup there too. Jabber 51. Oh, this chart got out of order, guys. This is meant to be with the DBC. This is the weekly chart. So you can see this weekly. It got way overbought in mid-2022 and has been in consolidating since. We have 3 major waves down. Moving average ribbon is now starting to really pinch. So if the commodity market is going to bottom soon, this is definitely something to watch. Let's move on. Jabber 52 Bitcoin. Ooh, I apologize, guys. It looks like stock charts have moved these trend lines. Bitcoin had a nice day. The annoying thing with stock charts, when you have a moving average ribbon, these trend lines move. So I apologize for that. I'll clean that up next time. Jabber 53, Mara. Again, Mara, as you know, had that parabolic move. Remember, we had this as a long idea back in November. Went up over 100%. If you simply bought, a couple hundred shares back then, you made a few $1,000. Easily enough to pay for the membership for years. Again, it got overbought, parabolic, had a quick sell-off, bounced off that 20-day moving average where I said it would find support. Bounced off of it again today. Jabber 54, MSTR. Now this is the one crypto stock that was actually down, MicroStrategies. And we typically like this one better than Mara, but I didn't look. Obviously, probably some news here. Closing below its 20-day, this sets a stage for it to then pull back to its 50-day moving average. Next, Jabber 55, US dollar. Again, up today slightly. Last week it stalled at that downtrend line around that open gap. What the dollar does here is going to definitely strongly influence gold and some of these commodities. Jabber 56, gold. Again, down about 0.8% today. Remember, it had stalled at that 61.8 fib. Still above its 50-day moving average. We'll see if it can hold that or not. Jabber 57, here's another daily chart of gold. This one has the GDX-GLD ratio. This gold stocks slightly outperformed the metal today, but again, we need to see more than a day. Otherwise, we could see this as more of a wave C pullback. Jabber 58, silver, more just a small range day, otherwise inside the larger pattern. Jabber 59, silver on the monthly, big 4-year coil, as you know. This is something I'll be watching, but it's possible this could trade into this coil for much of the year. Remember, this is each candlestick represents a month, but eventually when this breaks out, this should have a monster move because energy's been building for a long time. Moving on to gold stocks, GDX, here's the weekly. Again, it's still in this big weekly coil. We've sold off the last few weeks, as you can see. Jabber 61, GDX on the daily. We had that kind of inverse head and shoulder pattern look in November, higher low. Then we formed another higher low. Pulled back off this resistance area. You can see it's such a little double top resistance area there. And still holding the 20-day or 50-day moving average. I still think this area could recover, but this is an area to start watching it. They definitely want to see it stay above this previous higher low. Jabber 62, GDX on the 2-hour view. Still something to monitor. Next, Jabber 63, BPGDM. Remember, this finally broke last week. It had been flattened there for about a month. Anyway, it's right at 50% now. Great buy signal back here in the October timeframe when it was buried oversold. All right, guys, let's go ahead and follow up with trade ideas. So, Jabber 64, HE, it's been on the list for a couple weeks. I don't know if any of you have been patient. I still own this. I bought it on this little trend line break, and I've been in it. My stop now is essentially at Friday's lows. I want to see it get going now. Next, this morning I put out some nice setups before the market opened. I posted them on our trading community. NVIDIA was in a tight coil, and look at today's break, up 6.5%. That's a huge day. Congrats. I know some of you caught that puppy. Jabber 66, Microsoft, another one I posted. It closed near its 50-day moving average last week. Was it a coil? That was a very low risk area to go long, placing a tight stop right below that 50-day. So still long this. Now we'll see if we can break out. Jabber 67, AQN, little flag pattern. It broke out today. This area is a potential target zone right up in here, this supply zone. Jabber 68, MJ. This is a weekly chart. This is a pot stock. You can see it's been absolutely decimated. It's trying to form a longer term base. Let's take a look at the daily. Jabber 69, here's the daily. Broke out on Friday technically, up a little bit today. Volume patterns are decent. This is my target range up into here. Where could a swing stop go? If you want a wide swing stop, it'd essentially be Friday's lows now. Jabber 70, VAC was also one I posted this morning. Slightly triggering over this. A really beautiful bull pennant pattern here. And swing stop could be right around this 83.80 area. Target range is up here around 100. Next. Jabber 71, HCAT, another one I posted this morning. Bull flag breaking out. This is my target zone. Next, Jabber 72, LVS, Las Vegas Sands, another one I posted this morning. Breaking out of this little pennant. This is my target zone. Jabber 73, AGTI, another one I posted this morning. Nice coil. Has not broken. This is still actionable. If it can break here, my target's up here around 11. Next. Jabber 74, APLD, another one I posted this morning, closing right at the resistance. If we can clear this, this is my target zone. And finally, Jabber 75, NAAS. I've been following this little bitty low price stock. Testing the wedge here. To me, this could be a low risk area for this to pop off of here. I went long, put a stop basically below today's lows. All right, guys. So far, futures are pretty flat tonight, which is pretty much what I'd expect. We'll see what happens tomorrow. Have a good rest of your evening. Thank you for being a subscriber. And if you're not, subscribe, please. Take care.